Thank you. We're going to continue the conversation about tokenized assets, stablecoins, and custody with BSV. I am going to moderate a session now with a fully remote panel. Let's bring them onto the screen. They're from all over the world, including Australia and the United States. They are James Belding, co-founder and CEO of Tokenized, who you just heard about, Christian Solomine, a board advisor for BitBoss Corporation, and Karen Wendel, the president and CEO of TrustChains. Hello, everyone. How are you all?
Hi, guys.
So James, you just heard from Jeffrey, who is a user of your tokenized protocol and platform. Can you tell us how you started working with Jeffrey and why you think tokenized is a good fit for what he's doing with Quantium?
Sure, yeah. So tokenized, our main flagship product is a smart contracting platform, and we really focus on financial instruments, financial contracts more accurately. So to just kind of go back a little bit to kind of give you some context, we developed a protocol that's on BSV, and the idea is that we are looking to usher in a digital transformation of contracts and leveraging some of the properties of BSV to enable a drastically improved user experience across the entire value chain. So there's some really important features that can be obtained. Jeffrey has a very interesting use case and a great understanding of the market in terms of the regulatory side and concerns, as well as sort of the investor side and the practical components of managing a fund. And what we're looking to do is provide him with a digital transformation, a lot of the key processes and records that the participants, the investors in his fund, have to deal with. And likewise, on the flip side, the manager managing those records. So that's really the main focus of it. And we see that with our platform, with the protocol, with BSV, when you bring all this stuff together, you can use software to leverage it to drastically improve these processes, delivering real-time insights to investors. Novel functionality has never been seen before, much more expressive and automated type processes and functions that strip out massive costs from the whole process, including time. So those are the things that we think that we have a good synergy on and we share a similar vision for. And we're essentially just working together to iron out the kinks and start to take this mainstream.
Great, yes. And BSV blockchain is also about saving time as well. Christian, let's go to you. At the last CoinGeek conference in Zurich, we heard from the CEO of BitBoss, Matt Dixon, about a stablecoin that BitBoss was in the process of getting out into the marketplace. I hear it's live, so tell us about it and how it actually works.
Yeah, happy to do that. And I just got back with Matt and the team from the Global Gaming Expo in Vegas. It's still going on right now, but it's the largest gaming conference in North America, happens every year. And one of the things that the industry is now looking for due to COVID and really the changing demographic in the space is to allow for cashless gaming. So that is a seamless routing of funds on and off slot machines, on and off table games. And in order to do that, there's a variety of different solutions out there. And most of them are custodial solutions, which have inherent limits, which have very high cost, which have a lot of friction. And the different gaming operators want to have an omni-channel experience. They want you to be able to route funds off a table game, but then play an online sportsbook. So the use of a stable token is really, really interesting due to the non-custodial element of it. So we've created one that is backed by an FDIC-insured bank account, and that's what the players will be able to procure and then transact digitally with the gaming operator. So if you're thinking of an experience where you go into a casino, you're routing funds right off your wallet onto the slot machine, you might be walking down the street, get a taxi cab, do a peer-to-peer transfer, and this is all backed by a stable token that we've created. We're going to be launching with a land-based operator for that in Q4. And we were meeting with a bunch of other operators that are putting together their strategy for cashless over the next year at the show. So that's the big news this week.
Great, but the stablecoin is ready to go?
Ready to go.
Awesome. So we'll dig into a little bit more about that in a moment. But Karen, let's talk to you now. So as more and more companies are taking a look at how to create tokenized assets, tell us how the world of custody, which I know you absolutely love, plays a role in this.
So, and I'd like to actually build on something that Christian said. One of the things that I think is so interesting is when people start talking about custody, they tend to think of custody as something that is a bit opaque, it's a bit difficult, it impedes the ability for people to do what they want to do. And the way Christian just described it, he's talking about stablecoins as a way to get away from the challenges of custody. But the reality is, what we're doing at TrustChains is we're reinventing custody so that you get all of the advantages that custody gives you of security, of regulatory oversight, of reporting, of the ability to establish audit trails that can be viewed by the regulatory environment, that can be viewed by people like FDIC insured banking institutions. We're working at making custody deliver that in real time and have custody deliver with a seamless user experience. And so the things that James is doing with Tokenized and some of the things that Christian's talking about from a stablecoin environment are the types of things that we want to address inside TrustChains to make custody much more nimble, much more agile, and to unlock the power of what custody is all about. And it's super exciting, Jimmy, because if we do this properly, we'll transform not only the things that Christian's talking about, but we'll turbocharge the activities that Jeffrey was talking about previously about futures exchanges and establish a platform that is regulatory out of the box.
Got it. Christian, let's go back to you. Speaking of regulatory compliance, of course, Jeffrey gave us a great overview about that. There's been a lot of talk and coverage in the news media recently about stablecoins and regulatory scrutiny of them, including whether or not there are sufficient assets to back stablecoins such as Tether or others. And there's some more news about it I saw today. Tell us how your stablecoin addresses that, because yours is unique and it's different than how these other stablecoins have approached it.
Yeah, I think with some of the other stablecoins where you're backed by a trust, we're actually backing the stablecoin by bank deposits in a pooled bank account. So when players are looking to procure that stablecoin, they're taking funds from their bank account and making a deposit in a pooled bank account. So this is actual U.S. funds, and then we at that time mint a token. So that is a nuance, but a very important difference. And I think the other thing that regulators are looking for is the tracking associated with this for responsible gaming limits, daily aggregate totals, and it's difficult to do unless you're using a blockchain-based solution. So making the deposit to a bank and then issuing that token is really, really important. And I believe it should be the first one launched in the United States that's related to actual bank deposits at a federally chartered bank.
Yeah, and of course it's built on using the BSV blockchain. And so I want people to understand this, where people question, for example, Tether, whether it has sufficient reserves to back all of the Tether coins that have been minted. Their process does not mint a token until someone, a player, sends an ACH or other transfer into a pooled bank account that they work with, and therefore there's a verifiable US dollar for every minted stablecoin that they use in their system. Is that correct, Christian?
Yeah, that's right. And there's also a lot of other inherent advantages of using BSV, including big blocks. It allows us to pack in a lot of transactions into that block and dramatically lowers costs and gives us the stability that gaming operators need for that experience inside the property.
Right, so it's the first FDIC-insured funds for stablecoin that we're certainly aware of. James, let's go back to you. How does your platform help a token issuer comply with all of these rules, regulations that we're hearing about? And there's, them in every jurisdiction around the world.
There certainly is. So a way to think of this is our protocol is very much has compliance processes built into it and those functions. So the protocol at the protocol layer on BSV is sort of a multi-party protocol. It has recognized different entities, regulated entities, brokers, all these banks even, where they play a role in these regulated instruments, for example. And our protocol recognizes those roles. We recognizes their functions and the things they need and what they don't need. And we allow for them to conduct and perform their functions at the protocol level. So this is really like cutting to the core of what non-custodial means in our mind, is that yes, you have a non-custodial key essentially arrangement that holds these tokens, but in terms of the other functions that go to performing over the life cycle of the contract of the token, things that need to be done. If you lose your keys, you have a regulated entity that can come in, cancel those tokens, reissue new ones, freeze them, confiscate them for property right disputes or other types of court orders. All of those components, we believe, are important commercial records that affect, obviously, the state or the value of a token. And it's just how business is done. These are important records. There's many parties involved, and we recognize those roles and we build into the protocol level, and then therefore imbue all of those records with the incredible properties of Bitcoin as a data layer. The best possible marks for data integrity, for data availability, and for the performance. So these are things that we really take a great deal of ownership over and provide all of these components at a protocol level. And then our platform makes it a really easy experience. So it's collaborative. It brings all those roles, even custodians, into the mix and allows them to perform their functions in a way that was never possible before. So that's really, really important.
Let's go to you, Karen. James brought up a point which I know you think about a lot, which is this question, especially in the world of tokenized assets, about how do you define who controls the asset, who possesses it, who owns it, especially if it's a token of some underlying asset. You want to address that issue for us?
Yeah, so I think it's really great you brought that up, Jimmy, because this whole conversation of control versus possession, and James hit this to a certain extent in terms of talking about tokenization, because one of the things that the regulators are struggling with right now is when you're talking about a tokenized asset, the very aspect of tokenized assets is that you are abstracting the proof of ownership, if you will, of the asset from the actual asset itself. And so a lot of what's going on right now in the regulatory world is discussions about, all right, if you're going to tokenize an asset, how do you demonstrate who actually has possession of the underlying proof of value? And second, how are you going to demonstrate who has control? And so protocols like BSV are really important in that environment because BSV allows you, as Christian said, to store massive amounts of information. And you can store that information in ways that can establish both a chain of processes that support the control aspect, but that can also demonstrate the possession piece. And so you have this really, really powerful tool in BSV that allows you to get to the heart of an issue that has been a very big problem in allowing the power of tokenization to be leveraged on a broad basis. And I think that's one of the things that's so exciting about what's happening at this conference and with the providers that are presenting here is that ability to use a technology to deliver something that regulators need to be comfortable.
Do you foresee a future, Karen, where BSV's, just data maintenance and integrity properties can be used to help define this possession versus control issue for tokenized assets, even on other chains?
I do, actually. And it's one of the things that I'm most excited about with BSV is because the size of the blocks that BSV can support enables BSV platforms to do things that other chains cannot. And so over time, one of the true powers of BSV is that BSV can become the source of truth, not only for the tokenized assets, but for transactions that might occur on other chains that need to have that truth. And that's one of the roles that I think prime custodians are going to play, both in supporting people like Christian and supporting people like Jeffrey Hammond, in that they can provide that source of truth that will allow the entire financial ecosystem to operate with more security and stability. It is very, very dramatically different than the things that exist today.
Yeah, so we foresee a future where, as we talk about, BSV really can be the plumbing for a lot of the data and financial systems of the world, even if they occur on other blockchains.
It's not just on other blockchains, it's for any financial transaction. So it could work with fiat, it could work with bonds, it could work with stocks, it could work for anything, not just other blockchains.
Yeah, good point. Thank you for making that. James, we'll go back to you. As you're talking to your clients and potential clients, how are you foreseeing that they want to address the issue of custody of their tokenized assets?
So, I mean, in general, when we've been in discussion with them, custody is certainly an important part, and it's a very nuanced discussion. There's a lot of complexity there. But when you hammer home the point of proper multi-sig, so, I mean, generally, customers, the issuers are going to be organizations. There's many people involved, executives, directors, the like. If you have a proper multi-sig arrangement and you use two-factor authentication, so say like a 3 of 5 arrangement, then you have incredible security that's better than what's there before. And they can express their intent to do certain things, to transact, to amend contracts, to do all these things with that arrangement. And they can actually, part of our protocol and part of our solution allows for the delegation of the ultimate responsibility of canceling and issuing and confiscating things that I referred to before to either an oracle that you designate, which may be a regulated entity, or the issuer themselves. So the multi-sig arrangement is extremely robust, better than what there is today. And all the records are stored on the blockchain. So you have that immutable audit trail. But if there is a catastrophic event, if keys are lost, you can always go and get them reissued. So there's a set of recourse. Obviously, the bar is very high. In order to do that, you got to prove it. There might be a holding period, but all of it is possible. So it removes the risk that most people perceive with Bitcoin and blockchains more generally of that catastrophic event and essentially just losing all your chains, all your coins, all your holdings. We can sort of totally remove that from the equation. That's no longer a problem. And so custody becomes less important in a lot of ways. Now, again, it's a nuanced conversation, and you can add custodial elements to those key arrangements to satisfy any regulatory concern, any operational concern or policy. So we can sort of handle all those things, and we think it's less of an issue when you really get down to the nuts and bolts of things.
Yeah, so moving away from the mantra of not your keys, not your coins, which I think has caused a lot of confusion over the years of Bitcoin's history.
It's important to think that the actual token itself, like a share certificate or a bond certificate, is only one data point in the case for ownership, right? So I've used this example before, but if someone accidentally sent you a share certificate by email in a traditional sense, you're not really going to think you're the owner of that company. Right. If there wasn't a real, negotiation process and other data points, emails, payment, things like that. So we think that's a really important point to consider, that even with a non-custodial arrangement, there's a lot of other data points that are important, and we think all those data points will benefit everyone to be put on blockchain. And that's what we mean by putting all the commercial records on blockchain, and that's what we're attempting to do.
Yeah, and that's a really important point. I know Craig Wright makes it all the time, right? Which is that there are legal constructs which determine whether someone or some company owns an asset, and mere possession of, let's say, a private key, mere possession of a stock certificate, keys to a house don't establish that, because you can steal those things, or you can inadvertently receive them, or someone can lend them to you, but it doesn't mean you own a car or a house just because you happen to hold the keys to that car or house. Let's go back to Christian. Christian, so what's next for deployment of your stablecoin? You mentioned there's one land casino that you've already signed to use the stablecoin. Can you tell us where it is at least? So maybe I can send some people to play there and use a BSV-based coin?
Sure. So we haven't publicly announced, but it's going to be in the state of Colorado. That's where BitBoss Corporation is based. Some of the extensions that the gaming industry is looking at is now taking that and creating omni-channel experiences for their players. So the ability to play in an online regulated sports book, the ability on the casino floor to seamlessly transfer funds from one wallet to another. So if I'm on one side of the casino, I'm out of funds, my wife's on the other side and she wants to send me some funds, to have that sort of experience. And then also use it for purchases, buy a show, get a buffet, having that seamless routing of funds all through the stable token is ultra interesting to these properties. And there's a bunch of other things in addition to that they find really valuable. The ability to prevent double spend fraud, the ability to get all this rich data in the block associated with the sort of things that their players are doing. What slot am I sitting at? What sort of things am I purchasing? When to do offers and promotions to the player? So they're really starting to think out the next 6 to 12 months. What's going to be added on? Playing games is one thing, but all of the rich data behind it is what they're looking at to dramatically improve player experience.
Yeah, so casinos can, maybe it's good, maybe it's scary to some players, but they'll know a lot more about your playing habits, especially at slot machines. So you mentioned the ability to use this stablecoin outside the casino. How does that work?
Basically, what we're doing is we're KYCing both the players as well as businesses that want to participate in the ecosystem. So what we anticipate is when the larger casino operators start offering the solution, other ancillary service offerings are going to want to participate in that. So we've set up a platform that allows for both consumer onboarding as well as business onboarding. So as these folks walk out of that property and are walking down the strip in Vegas or wherever they may be, there's going to be other businesses that can participate in that ecosystem. And that's what we think is going to be ultra valuable, both for surrounding businesses as well as the player, having that utility.
Great. James, let's go back to you. Can you tell us, walk us through the basic steps that a company needs to do when they're working with your tokenized platform? Maybe you can use a Quantum as an example, how to get from what Jeffrey has described to deployment.
Sure, yeah. So one thing that's really important to emphasize here, I think, and what I think differentiates our solution from a lot of other solutions is the focus on smart contracts. So yes, we offer tokens, but we think of tokens, as what they are. They're just ownership records or instruments that can be used as part of a bigger contract to represent ownership of rights and duties in that contract. So for us, we think that 95% of the value, in a very crude terms, is really down to what you can do with smart contracts. And when I say smart contracts, I mean the full contract with it being digitized. So legal prose, codified terms and conditions, all of the mechanics that go into representing ownership units, transferring them, the governance components. So this is what we really offer. There's a term that's thrown around a lot, is Ricardian contract. That's definitely a part of what we're doing, but we really like to call it smart contract as a generalized concept, which we think will persist long term. So to issue these tokenized instruments, in the case of a Quantum, let's say, you go into our platform, it's a no-code solution. So this is meant for lawyers, executives, accountants, the type of people, advisors, to work together to specify the contract. So if it's an equity instrument, you're looking at like an entity contract, a contract that defines a trust or a partnership or a company, and then all the controlling terms and conditions that go into defining that organization, as well as the rights and duties of those instruments. You might have multiple instruments to represent different classes of shares or units, and different voting rights or different specific rights for those. So a lot of those terms are codified. So as an issuer, you would go through and you'd select the things that made most sense to you. You'd add the legal prose that was appropriate for your organization, and then you'd literally click a button and you'd have a bunch of tokenized instruments authorized in your treasury, ready for issuance into the market, where you can then atomic swap it for other instruments like cash or whatever arrangement you have. And that's essentially the heart of it. It's a system that lets you define these contracts, write them, issue them, and manage and trade them over the life cycle.
Great. Karen, let's go back to you. As you know, the BSV ecosystem is very focused on growing with micropayments and microtransactions, not just of the native BSV token, but potentially for tokens based upon BSV in the future. How do you think that is going to shape or change the custody requirements or custody practices in the future?
So it's really interesting, Jimmy, as I'm listening to James and I'm listening to Christian. One of the things that occurs to me is that what is happening right now is that everything old is new again. Yeah. Back in the mid-90s, I wrote a position paper for the World Bank about the introduction of private currencies, because there was a lot of interest from a lot of very large corporations who were getting tired of FX exposure, and they wanted to create their own currencies. And they specifically wanted to create their own currencies to support micropayments and microtransactions, and they were very interested in how they were going to handle that. And one of the things that I think is starting to happen and we're starting to see evolving is with stable coins like the one that Christian is discussing, they're basically creating a private currency for use within a specific ecosystem. And what's happening here, and it's interesting that we're using the terms custodial and non-custodial, because I think we're confusing function with entities. Because what James is describing and what Christian described in terms of using a bank, they're actually performing what I consider to be custodial services. They may not be using custodial entities in the way custodians are described today. But I think what we're seeing, and I think this is going to accelerate, is that custodians as entities are going to continue to perform functions, but we are going to see more and more of these types of custodial services that are being embedded into native activities that are going to get the same type of regulatory scrutiny that a custodian entity would get. And I think that this goes back to the point I was making before, is that BSV provides the mechanism whereby those services, because a custodian basically does three things, Jimmy. They store assets, they report on assets, and they take actions with those assets. And so everything that's been described so far on this conversation has been describing those types of things. And a BSV structure can support that ability to be delivered not just by custodian entities, but by other entities that are performing custodial services, if that makes sense.
Yeah, absolutely. That was really helpful. Let's end by asking each of you to give us a preview of what's next for your businesses and what we can expect. We'll start with James.
Sure, yeah. So we're Quantium, a customer. We're just working through the details now to get their project or their fund off the ground. So that's something to be expected over the next few months, a launch. We also got a bunch of other customers in the pipeline that we are working through the various use cases, financial instruments, municipal bonds, things like that. And we're essentially just getting all the features ready to support those use cases. We have really turned a corner in terms of our feature set and capabilities. We are now at a proper MVP in terms of being able to actually deliver real financial instruments with ticking all the boxes in a very compelling manner with a rich and comprehensive UI that can actually go ahead and make the experience significantly better. This is a next generation technology. And the whole private markets that we're aiming to target at the beginning, the record keeping system there is extremely antiquated, extremely frustrating to use in general for everyone involved, and extremely slow paced. It is ripe for a digital transformation, and that's what we're looking to usher in over the next 3 to 6 months.
Great. Christian, what's in the pipeline or next for BitBoss?
Yeah, so getting the solution live and really just getting a lot of information and analytics about experience. And I think experience is ultra important for people that are new to this sort of technology, interacting digitally with these sorts of mechanisms that traditionally were used with cash instruments sliding across the table. So really keeping a close eye on the player experience and refining, and then introducing this omni-channel experience is really what we're focusing on over the next 3 to 6 months as we get this rolled out.
Awesome. And Karen, you get the last word.
Thank you, Jimmy. And what's up next for TrustChains is we're in the process of filing for a limited purpose trust license. We very much believe that the future of BSV as a community is to demonstrate to regulators that not only are we willing to be regulated, we want to lean into the regulatory space, and we want to demonstrate that BSV is uniquely positioned to do the types of things that regulators want to see entities that are players in this space are going to do. And so we are going to build both custodial services, as I talked about before, that can be used in the context of different offerings, but also a custodial entity that will be natively built on the BSV blockchain and that will enable us to deliver the store, act, and report functions of custody to support things like what James is doing, to support what you're doing, Christian, and also to support all of the other activities that are going on in the community where we need to demonstrate stability, gravitas, and this embrace of the regulatory environment. That's what we're doing.
Great. We look forward to seeing all these developments from these three companies. Please give them a round of applause and thank them for all their innovative uses of BSV.
Bitcoin mining, Bitcoin wallet, blockchain, stablecoins, Metanet, the evolution of money. Everybody is talking about Bitcoin today, but what exactly is it? Learn the basics from experts. Learn what Bitcoin is, how it works, and why it matters. Bitcoin 101, your ultimate guide to the fundamentals of blockchain.